Hi, I'm Louis. Is KLK your favorite plantation stock? KLK's main business segments include oil palm plantation, manufacturing, and property development. Profit and dividend distribution. Between financial year 2012 to 2021, KLK's revenue has been on an upward trend, while profit before tax and profit after tax have been on a very slow upward trend. In financial year 2021, KLK's profit increased substantially due to rising crude palm oil prices. Between financial year 2012 to 2020, earning per share had been on a downward trend. For financial year 2021, earning per share has been unusually high due to rising prices of CPO. During this period, dividend distribution was consistent. In most financial years, dividend was maintained at around 50 cents per share. Management efficiency. Between financial year 2012 to 2021, KLK maintained a net profit margin that is mostly between 5 to 10%. Between financial year 2012 to 2021, the return on equity of KLK was maintained between 5 to 15%, which indicated available funds were well utilized to generate income for the company. Stock valuation. Between financial year 2012 to 2021, net tangible assets per share of KLK has been increasing steadily, indicating that it has been investing in new assets to increase its manufacturing capacity, as well as increasing its plantation area. Financial management and stability. Between financial year 2012 to 2021, it is shown that KLK has been investing significantly in property, plants, and equipment in order to ramp up its production capacity, as well as for replanting old trees with new young trees. Between financial year 2012 to 2021, KLK's equity to liability ratio is mostly above 1, indicating that it is having enough reserve funds to pay off its loans. Between financial year 2012 to 2021, KLK's current ratio has always been above 1, indicating that it is having enough funds to pay off its short-term debts. Between financial year 2012 to 2021, KLK's cash flow was maintained to above Rm 1,000 million most of the time, indicating that the company's finance is stable as well as having excess funds for further development. As reported in 2021 annual report, KLK has been expanding the scale of its operations and on all fronts. Acquisitions of new plantations have been raising its plantation area significantly, while its new manufacturing plant is ready for production. These developments are likely to ramp up earnings in the next few years. Between financial year 2012 to 2021, it is shown that KLK's earning has not been rising quickly, but it has been relatively steady. Its dividend distribution to shareholders has also been consistent. The annual report from recent years also shown a large increase in capital expenditure to increase its production capacity and plantation areas. This is also reflected in the increase in net tangible assets per share value. Rising production capacity may indicate increased earnings in the future. Overall, KLK maintains a good return on equity level. Its debt level has been relatively low. Its cash flow is sufficient, indicating that the company's finance is at a stable level. In conclusion, the plantation sector is a very stable business. Palm oil is widely used as a raw material for a variety of food and household products. Future demand for it is expected to be increasing. Malaysia has a natural advantage in terms of climate that is very suitable for cultivation of palm oil trees. Hence, Malaysia has become one of the major palm oil producers in the world. However, plantation companies' profitability is still frequently influenced by the crude palm oil prices in the world commodity market. KLK is one of Malaysia's largest plantation operator. While boasting one of the largest plantation areas, it is also well equipped with a large number of palm oil mills as well as refineries, which enables it to produce more value-added products. Hence, its profitability is less dependent on the CPO prices. Recently, KLK has also diversified into the property development sector, which enables it to increase its earnings as well as decreasing its dependence on its palm oil businesses. Overall, KLK has a good performance in terms of earnings, financial stability, as well as management of its many resources. Currently, its PE ratio is around 11. Do you think it is still worthy to invest in? Also worth mentioning, the future plans for KLK in the next few years will be replanting of old palm oil trees with young new trees to improve productivity, increase mechanization of the palm oil fruits harvesting process to reduce reliance on foreign workers, to produce palm oil breeds that are higher yield, and to develop other technologies to improve production efficiency. Currently, KLK is about 97% planted with oil palm. Geographically, 55% of the oil palm planted area is in Indonesia, 43% in Malaysia, and about 2% in Liberia. Meanwhile, rubber is planted only in peninsular Malaysia and makes up the remaining 3% of planted area. Also, the planted trees of KLK are made up of 86% matured trees, which will ensure steady production of crude palm oil in the next few years. KLK's manufacturing arm is well equipped with 31 palm oil mills, 4 refineries, and other facilities. That's all for today. Feel free to share your views in the comment section. See you next time. Bye! The content above is for sharing and reference purpose only. It is not an investment recommendation. Investors are encouraged to carry out further research and analysis, as well as follow up latest update information before making any investment decisions.